Dollar is king as Fed hike bets mount while Putin bolsters crude. New York, November 21. The dollar maintained gains as trading got started for the week, with investors pricing the chance of a December interest rate hike in the US as almost certain. Oil jumped after Russian President Vladimir Putin expressed optimism over a deal to freeze output. The New Zealand and Australian currencies opened lower versus the greenback, and the yen was near its weakest level since May, with Fed funds futures signaling 98% odds of the Federal Reserve increasing benchmark rates next month. US crude rose more than 1% with Brent, while gold continued to drop. New Zealand government debt extended declines as stocks there and in Australia retreated. Futures on equity benchmarks from Hong Kong to South Korea foreshadow drops, while contracts on Japan's Nikkei 225 stock average edged higher amid the yen's slump. While the prospect of Donald Trump as U.S. president unnerved markets in the lead-up to the election, his vow to boost infrastructure spending has turbocharged bets on a Fed hike, underpinning the dollar's steepest two-week rally versus the yen since 1988. Fed Chair Janet Yellen told lawmakers that the central bank is close to boosting borrowing costs, with speculation the president-elect will bolster fiscal stimulus already fueling bets on further policy tightening in 2017. In Europe, Angela Merkel said she'll run as German Chancellor again, news that may calm markets after an exceptional few weeks. We have little doubt that the world is shifting into a new paradigm where politics and fiscal policy will gain far more prominence, Philip Balkin, a senior economist in Auckland at ANZ Bank New Zealand Limited, said in an email. Markets are indeed behaving that way already as the Trump trade of higher yields and the dollar remains the centerpiece of market moves. Both Japan and South Korea report on trade today, while New Zealand issues data on credit card spending and Thailand updates on gross domestic product. Taiwan will report on its current account. Industrial stocks and banks drove Australia's S&P ASX 200 index down 0.2% as of 8:44 am Tokyo time, 0744 in Malaysia, following a 0.2% retreat last week. New Zealand's S&P/NZX 50 index dropped 0.2% as well, while yields on the country's 10-year debt gained another 2 basis points, or 0.02 percentage point, to 3.14%. In Japan, Nikkei 225 futures were bid for 18,020 in the Osaka pre-market, up 0.3% from what they closed at on Friday, while contracts on the index traded in Singapore gained 0.3% to 18,045. Yen-denominated Nikkei 225 futures advanced 0.3% to 18,080 on the Chicago Mercantile Exchange, following a 0.4% drop at the end of last week. Futures on the Kospi index in Seoul slipped 0.2% in most recent trade, with contracts on Hong Kong's Hang Seng and Hang Seng China Enterprises gauges down at least 0.3%. FTSE China A50 index futures retreated 0.3% on Friday. The Kiwi led the retreat among major currencies, weakening 0.3% in a ninth day of declines, its longest run of losses since 2001. The Aussie dollar slipped 0.3% as well. The yen was down another 0.2% to 111.07 per dollar following last week's 4% slide, the worst since July. We have seen some monster moves over the past 2 weeks on Fed expectations, and I think that can't go on for much longer, Chris Weston, chief market strategist in Melbourne at IG Limited said by phone. I wouldn't be surprised to see a little bit of pause as investors take a break to catch their breath, and these Asian markets may take a little breather as well and see some consolidation, whether it's been falling or rallying. 1-month non-deliverable forwards on emerging market currencies in Asia largely foreshadowed declines, with contracts on the Korean won and the Malaysian ringgit down at least 0.4%. Bloomberg.